Welcome to This is Jax, a hyper-local podcast from Jacksonville, Florida. Are you thinking about digging your roots into Jax? Then this is the podcast for you. I dive deep into local housing market and the economy, and I'm talking about topics that matter to you as a homeowner and an individual who's investing in our community. If you're a first-time listener, hit the subscribe button, and if you're watching on YouTube, leave me a comment and let me know what Jacksonville topics you think I should discuss. All right, so first thing, the election is over. Now what? What does that mean for housing? What does it mean for Jacksonville as a city? What does it mean for the economy? There's all kinds of questions out there. What's some of the data that we saw? We're gonna dive into that. We're gonna talk about what the housing market does before an election and then after the election, historically, how it compares to the data that we're looking at during this election cycle. I think it's gonna be fun. Welcome to This is Jax, a hyper-local podcast. We're going to do our best. We're going to bring on successful business owners, the people who drive the cities, share a lot about what makes our city so great. So you can be confident and comfortable. This is a city that you want to call home. This is the stuff I'm obsessed with. When it comes to real estate, I am really excited about the numbers and the data. I just want to consume it, right? And I love interpreting it. And the favorite part of my job when I sit down with individuals at their dining table and they ask me these questions and I get to dive deep into it. That's the best part of my job. And it's part of why, I'm coming here for the podcast, because now I can do it on a much larger scale. So before we begin, I do want to highlight something. This Sunday, this was like just the other day, but we had our first ever beach ball party, our first ever fall party. We held it at Beach Ball out at Jacksonville Beach. If you haven't been to Beach Ball at Jacksonville Beach yet, I recommend it. It's great for a party. I was kind of apprehensive because it's a bowling alley. They just spent $13 million renovating it. And I've got two opinions on that. First of all, I miss the old bowling alley of our youth. Like in the 90s growing up, we would go to the bowling alley. It smelled like cigarettes. There was like beer and French fries, and that was basically it. And you bowled, and I think it was like $2 for shoes and maybe like $4 a game. So it was a very low cost event. It's not the case anymore, because all these bowling alleys, just like everything else in life, have been, they used to be simple. Now they're like overly extravagant. There's arcades there, upstairs, downstairs, all VIP suites, party rooms. And the way they charge for bowling is a little bit different. So I'm not necessarily a fan of the new concept of bowling. You wait forever. You have a time frame. It's like me and my daughter tried to go and it was like $60 and that was pretty disappointing. But, and that's not specifically at Beach Bowl. I don't know that. I just mean how bowling alleys are today compared to how they were when we were kids. But Beach Bowl is legit and it's a great place for parties. So we decided to book our fall party there. We had it. They did a great job catering. We got salmon. We got the prime rib, like carving station, mashed potatoes. And that's what I was really nervous about, because you're thinking it's a bowling alley and we're having salmon and prime rib. But it was so good. The turnout was great. Everybody we talked to, everybody we invited, first of all, was like past clients or friends and family type relationship. And so had a really good mix of people, had a really good time. And what I want to do on here is definitely highlight our sponsors. This is what's cool. Atlantic Coast Title and Escrow. They were one of our sponsors. House Scan Home Inspections, Future Home Loans, and Consider It Close. So here's what's neat about this. I am very picky about who I will vouch for. So this is probably the first time I've tagged a lot of these groups before in social media, and I have private conversations. But this is my first time like on a Facebook Live and on the podcast where I'm literally vouching for these people, and we've got these sponsors. And I'm proud that the sponsors that we have with our event were not just random sponsors that we wanted to bring in, but they're actual companies that we worked with. When I buy a house, I close it at Atlantic Coast Title and Escrow. Future Home Loans does my mortgage. When I refinance, they do it again. And I've tested this. I've applied at several other places. And my buddy Trevor, who's a mortgage broker I work with there, he is incredible. House Scan Home Inspections have inspected all the properties I've purchased, as well as my family members, and I highly recommend them to all of our clients. And Consider It Close handles all of our transaction management. So this is my team. When I say like, hey, I have a team, this is the team I'm referencing. It's not just me, because I'm really good at what we do on this podcast, breaking down the data, giving you advice on what you should do on marketing the properties. Each one of these companies specializes in their group. So what I've done is kind of assembled this power team of all these specialized groups. So you come to us and we're going to get you in touch with everybody. And big news, May 21st, 2025, I'm hosting my first ever annual VIP dinner. This is a special invite-only event, different from the fall party. You don't want to miss it. Here's how you can attend. All you got to do is send me 2 referrals that sell or buy real estate from now until May. So we're talking, it's the middle of November at the time we're recording this. So you've got about 5 months, 6 months to send me 2 referrals that sell or buy real estate. Stipulations, they must close on the sale or purchase, and they must close before the dinner, so early May. At this time, the location's still kind of up in the air. We got a couple places in mind. We're looking at Calford Chop House or kind of Green Pen. We got to kind of zero it in, and it kind of depends on size. You know, Chop House, maybe a party of 10 we can do, but if we have more than 10, we can go up to 50 people at kind of Green Pen. So that makes it, that's why that's still a variable. As we get closer, we'll put out exactly what it is, but you don't want to miss it. So be looking at that. All right. So the big question, right? The whole point of the episode, does the election slow the housing market? How does the election affect the housing market? So short answer, yes, it does. A presidential election will slow down the housing market. We saw the effects of that here in Jacksonville. I can tell you, just without even reading an article or looking at any data points or any notes, just the amount of times that my phone call was ringing or the amount of appointments I was booking or contracts I was signing. I can tell you, just as a business owner, that it's slowed down, but we're going to dive into some of the data. So first, let's look at some national data, national historical data. Every decision we make when we're offering people advice in the real estate industry, it comes based on historical data. So it's my job to wake up every morning and to consume as much knowledge and data as possible so that when you're looking to sell or buy real estate, because you have your own life, you have your kids, you have your work, you have your hobbies, everything else that you're dealing with, you're not in this stuff every day. It's my job. I literally get paid to be in this data every single day. So for me, I love doing it, and that's why I do this job. So I'm sharing it with you. So here it is. I bring this data, national historical data. From October to November, home sales typically decrease by 9.8%. So every year, year after year, a normal year, we see about, so 9.8%. Let's just round it up to 10%. Call it 10%. Home sales decrease by 10% during that time frame. So we're right in the middle of that right now, sitting here in November. And the election year, it decreases by about 15%. So considerably more decrease. And like I said, I can tell you, compared to last year this time, compared to this year this time, I can tell we're doing a lot less business. Now we're still having conversations. We're still setting appointments. In fact, the election's over, and I just signed another agreement yesterday. So there you go. The Monday after the election, I'm out signing agreements. So I'm telling you, it starts moving right away. Jacksonville data. So this is actual 2004 data. The data that's out right now. November data hasn't come out yet, because remember, we're in the middle of November, so we can't really assess November data until we get to December. It comes out, it's compiled. There's some research teams, members of NEFAR, members of NAR. They are the ones who are doing this research and data, as well as all your other leading sites, which we'll get to down below a little bit. But basically on the 10th of every month, the data for the previous month comes out. So right now we're sitting at November 12th, the day I'm recording this. The data just came out for October. And so here's what we saw. Closed sales were down 3.9%. So in 2023, from year to date, we saw 9,196 sales. And in 2024, we're seeing 8,836. So it's only a few hundred less, but hey, that's if you're one of the few hundred that's trying to sell your home right now, you're feeling it, right? So you can definitely feel that. Let's compare that. So the national data was that it's down about 15%. We're only down about 3.9%. So there's a lot to unpack there too. Obviously, different parts of the country are going to be affected differently. In Florida, in a state that people are always looking to move to, we're not going to be affected as much. And then here in Jacksonville, especially because as people are leaving New Jersey, New York, the Northeast, or if they're leaving out West because they don't want to pay the taxes, they don't want to pay the fees, they don't want to deal with the government there, or they don't want the weather of the Midwest or whatever it is, they look at Florida. Most of the people who transplant down from somewhere else in the U.S., they don't really know nor care about the difference in Orlando and Tampa and Miami. Well, what they think is like Orlando is Disney, Tampa is old folks, retired, and Miami is like expensive, just like as if you went out to LA or something. So then they look, and when they get on Zillow or other websites and they start looking, they see that Jacksonville is considerably cheaper. And I don't really like the word cheaper. I say a better value. It's a better value because I can get a lot of the same weather patterns that I get everywhere else in the state. I can get all the same tax benefits that I get everywhere else in the state, the same lifestyle, beautiful beaches. It's easy to travel to and from. I can still get to the theme parks in Orlando if I want to take my family over there for a weekend, but it comes at a lower cost. So it's a better value. It's not cheaper. It's a better value. And so you see a lot of people moving here, which points to this data where we're only down 3.9% when the rest of the country is maybe down 15%. So there's another thing to unpack there. I mean, if you're a homeowner here and you're wondering, is my equity safe, or am I still going to be able to sell my home? Like, the answer is yeah, you're still able to get your home moving on the market, and it's going to bounce back. So don't worry. Pending sales, however, are down. Remember, this national average data was from October to November. Well, we're already in November, but we won't see that data till December. But what we see is pending sales are down 6.2%. 2003, by this time of year, we had 9,273 homes sold. But here in 2024, we've only got 8,700 sold. So again, it's a difference of like 372 homes is the difference there. But I'm sorry, 572 homes, actually. If you're one of those 500 people that's been trying to sell your home, you're definitely feeling it, right? But overall, to be only down 6%, we're still doing better than the historical averages. There's another group that actually is waiting until after the election day, and 23% of first-time homebuyers are waiting until after the election day. So sum all this up. We've got a lot of people that are waiting until after the election to do something with real estate. But what is it that makes people wait to do something? Why are they not just still in the market? What is keeping them on the sidelines? And when are they going to come back? That's one of the big questions. So here's a couple reasons why people often wait to buy real estate. People are hesitant to buy before a presidential election. Uncertainty about economic policies. We have had a set of economic policies for the last 4 years. There's a chance that those could continue or that they're going to change. Obviously, we saw the outcome of the election, and so they're going to change. A lot of economists, a lot of the financial groups believe they're going to change for the better. And we saw that last time. We can just look at interest rates, and we can look at home prices and everything else. The market's been very volatile, right? Another thing is interest rate speculation. So interest rates, we're going to talk a little bit more about here later, so I don't want to get into it too much, but elections can influence the interest rate projections. Some buyers expect rates to fluctuate with the change in administration. Waiting allows buyers to see how post-election rates might impact their mortgage options. Most people are not paying cash for a home. They're going to mortgage that home, finance that home. I need to talk to my buddy Trevor over at Future Home Loans. But when we do that, people, they're hesitant. They want to see. And the rates, they may or may not change, but even if they don't, in people's minds, they still feel like they do. So they're nervous. They just want to see what happens. And then the last one, I pulled like 3 reasons why. There's a whole host of reasons why, but these 3. So market volatility and stability concerns. So the real estate market can experience slower activity, increased volatility during election periods. Buyers want to wait to see if the market corrects or stabilizes after the dust settles. And listen, this is specifically talking about buyers, but sellers feel the same way because they know this data. So they don't want to rush to the market, put a price point on their house that What if they put a price point on their house, and then after, just like we saw the stock market, crypto markets, the economy makes a big boom right after, their home price is going to go up. We're going to get into that in a minute too. So they typically wait. So this pattern, though, what it leads to, because we have a slowdown, it balances back out. So this pattern often leads to a post-election surge. All those who held off, regardless of the outcome of the election, they tend to be more confident in their decision, and they move forward with either purchasing a home or listing their home to sell after the election. Like you saw yesterday, I was at some folks' house that I actually met originally probably a month or more, maybe 2 months ago. But through our follow-up system, stayed in touch with them. And then from there, set an appointment after the election. Went in after the election, we're signing contracts together. Are you planning to sell your home in 2025? You need to start prepping today. The process of selling your home from initial strategy meeting. So from the time you call me and I first come out and we have a strategy on what we need to do to sell the home, your timeline, what your desires are, to closing on the sale. So actually signing the documents at closing table and putting money in your pocket. This can take 3 to 6 months. It is a process. Local Jacksonville data, the historical data shows sellers' profits peaked in April of last year. April 2024, the profits peaked for sellers. So with April 2025 being just a few short months away, now's the time to start prepping for your sale if you want to walk away from the closing table with the most money in your pocket. I made this whole process easy for you. Head to rigsgroupfl.com/sellmyhome, fill out the consult form, and schedule your free real estate strategy meeting with me today. So the election's over, and we just talked about what happens before an election. A lot of people wait to make a purchase. They hold off on their decision. There's some uncertainty on what mortgage rates are going to do, on what prices are going to do, who's going to get elected. There's just, overall, let's just sum it up in one word: uncertainty. And after the election, we're pretty certain we got the outcome. So now it's time to just make our best decision based on that outcome. So do more homes sell in a post-election surge? The answer is yes. Historically, 82% of the time, home sales go up. I don't have the chart in front of me. I read it earlier this week. There was like a nice graph, and it would show election years and did prices go up or down. And it was like election year, price went up. Election year, price went up. Election year, price went up. Election year, price went down. Election year, price went up. Election year, price went up. Election year, price went. You get what I'm saying? It was overwhelmingly showed. And remember, elections are every 2 or 4 years based on, but presidential elections every 4 years. So it went back pretty far, and it showed, hey, prices are going to go up. And not only sales are going to go up. We'll get to price in a minute. But experts are expecting, here's the number. So we're on pace right now for about 4.6 million sales. That's a little below average, right? And in 2025, we're projecting 5.2 million sales. So almost a more million sales. So more sales, if we're projecting that, that means we're saying that there is more demand for the homes. Homes are not going to sell unless there's a demand for them. So we see that that's what's going on there. And what about mortgage rates, right? So historically, rates come down from July to November in an election year, right? So rates aren't supposed to be influenced by White House. They're not supposed to be influenced by the current administration, but we all know they are, right? We're Americans, so we've got data now. We've got things like X and podcasts and social media. It's not just legacy media that has control over us and can spoon feed us what they want us to believe. We can kind of see the evidence for ourselves. And we know that, the feds are going to try to lower rates when it comes time to election time because they want to keep their jobs. They want you to continue to vote for them. And even though the last 4 years, like 1 year ago, rates were 8% and were extremely high, and now they're down to 6%, they hope you forgot that. They hope you forgot the last 4 years, and all you remember is this time frame from July to November. That's a little bit of my opinion, but it's backed by a lot of data that you can find for yourself. Look it up. So same thing with gas, right? Gas is another example. Gas was like $1.75 in 2020. And then we've been paying $4, maybe $5 in some places. Ridiculous, right? If you're putting super in your car like I need to. But what happens right before an election? They bring down the price. Why do they do that? Because they want you to vote for them again. It's just something that happens. It's a game that they've been playing for a long time. I think we're on the verge of some shifts in this country, some exciting shifts. And I was talking to Shauna just last night. We were talking about, there was these industrial revolutions and tech revolutions. I've seen some people calling it the innovation revolution, and it makes sense that there's so much chaos, so much animosity right now in our country. And part of that is due to, this shift in like what we're doing, and as we enter into this innovation boom or whatever it is. So anyway, it all reflects the housing market is all part of that. But here's the bottom line. We're going to see interest rates come down as the economy picks up, as the job reports pick up, whichever direction they need to go, right? What the Fed analyzes, then we're going to see that those interest rates continue to fall. And remember, when we break down interest rates, the Fed doesn't control mortgage interest rates. They control the Fed rate, which is the price that the bank has to borrow money at, and then that trickles downhill. It's like trickle down economics, right? So here's what we see. Demand's going to go up. Rates are going to come down. What does this cause? Our house is going to get cheaper. They're going to get more expensive. They're going to get more expensive. And the reason they're going to get more expensive, for one, supply and demand, right? Demand's up, the interest rates are down. It's easy for people to buy. There's only so many homes. 88% of the time, this is another stat I love, 88% of the time after an election year, rates have gone up and they're projected to steadily rise 2.5% in 2025. This is good because like in 2021, 22, remember we saw like 20%, all this like insane inflation. Now we're just seeing back to a steady 2.5%. We want to get 3 to 5%. So it's like it has bounced back out and it should be shifting up. You should be seeing your equity grow at a normal pace. Listen, if you want to learn more about this, head to rigsgroupfl.com/blog. You might not know it, but Monday through Thursday, I post all kinds of blogs with all this type of data. In fact, I'm going to jump on here real quick. And if you're watching on YouTube, you'll be able to see it yourself, but I'm going to jump on here. This is our website, rigsgroupfl.com. At the top of the page, there's a few options like sell your home, buy a home, media, about us, contact us. So all of those are pretty good. We'll get into it. But today I want to talk about the blog. You just hover over media and you go down and you select blog. And when you're in there, you can see, look, I've got an article from today. What's motivating homeowners to move right now? We had a Veterans Day one. And then if you go back to 11/1 was when I posted a Q&A, how do presidential elections impact housing market? A lot about what we talked about today is on there in an infographic, but there's tons of resources on here. So I just wanted to share this with you. And the easiest way, if you want to get more information or you want to get on our news list, there's a contact us. So easy. You can just fill it out. First name, last name, phone and email. It's that simple. Even a spot for a message, and you can write whatever you want in there. Hey, I'd like to be on your newsletter. Hey, I'd like, more information on the article you talked about on the blog or on the podcast, whatever it is. And we'll get that to you right away. But anyway, there's all kinds of data on there. We cite the sources. There's external links. Sign up for a newsletter. All that is right there. All these insights that I'm bringing you to today, they're common patterns observed, right? I'm observing them in the real estate market. But also, there's a lot of real estate experts, economists, and financial analysts that are out there. They're doing this research too. So you can find this data online. If you Google this, these articles that come up, go to ChatGPT or your favorite AI and say, hey, where should I look for data on the housing market? What is it? Or you come right to the source. You can email me, Nate@rigsgroupfl.com. Go to the website, rigsgroupfl.com. And I've made it easy for you. You don't have to do all the Googling and research. But, I'm getting this stuff from National Association of Realtors, groups like that are looking at market behavior, especially around elections. They do a bunch of studies and reports. I'm always consuming those, reading them every single day. The Feds, they come out. When the Fed has meetings, we've got that on at the office. We're taking notes on it. We're making projections ourselves based on this data. And then from a ton of other real estate firms like Zillow, Realtor.com, Redfin, X, social media, all that stuff. We're consuming all of that, looking at government policies. Like just this week, I'm a member of the Jax Chamber. So even last week I sat with, Congressman Rutherford at a luncheon. I sat with the CEO of Mayport Base, and all those things affect our economy on a micro level. It's good to look at the macro data, but we also want to look at the micro. Listen, if you want more information or you want to contact me, just go to rigsgroupfl.com, and you can get all the information that you want there, and you can contact me. You're listening to This Is Jack's podcast. Thanks for tuning in today.